Welcome in and welcome back. We are back with another Weekly Investor, the Weekly Investor number 10. So we've got three stories that we'll be talking about and then three stocks that I will be watching this week. The first story has to do with an article from The Motley Fool about Disney. This is an eye-opener, I have to say. The Motley Fool cites a paper projecting Disney Plus at 200 million subscribers by 2025. The same projections put Netflix at 258 million and Amazon Prime at 141 million, stating not only that Disney is going to be blowing Amazon Prime out of the water with growth numbers, but also that they are going to be catching up to Netflix in very short order. 5 years and some change after launch, being only 58 million subscribers behind Netflix would be an impressive feat, to say the least. I'd like to put this in a little bit of perspective. If they keep that $6.99 price point, which I don't think they will by 2025, I have to believe that price point is going to be somewhere around $10, if not maybe higher. I think a lot of that depends on how well their new content goes over. But if it does stay at $6.99 per month, that is $1.4 billion in revenue per month. And to further contextualize this, Disney's record-setting 2019 box office draw numbers were $13 billion total. This was a record box office year that saw Avengers Endgame. It saw a host of features that was The Lion King as well, I believe. The re-release of the live-action release of The Lion King, pardon me. That year saw them at $13 billion in box office revenue numbers. This 200 million subscribers at the current price point for Disney Plus would be $16.8 billion per year, which is just, that is a mind-blowing number. That is mind-blowing money. So how will Disney invest that money? What will Disney do to further their growth? Will Disney continue down the growth path? Will they find some other nook or cranny by which they might continue growing? It is difficult to say. Will they be further utilizing their Fox properties by then? Will they by then be branched out to including R-rated films under a different banner, much in the way that they used to have with Miramax? That's a lot of numbers for Disney. It would be interesting to see what they do with it. The next story is from Microsoft. Microsoft bought Softomotive, which will help to automate Windows-based tasks. And it makes me wonder if there is some further AI play coming from Microsoft. If Microsoft is able to crack some type of AI platform, plus their cloud platform, plus their operating system, it sets them up nicely to be at the forefront of next generation business practices. Also in 2020, they have already acquired Metaswitch Networks, which is a 5G and cloud specialist, as well as Affirmed Networks, which is another 5G play. Microsoft appears to be priming itself for a yet unseen business landscape. I am very curious what they think the future of business holds, where they think the future of business lies, and how it is that they will be attacking that in the now. Another interesting note, it looks like Microsoft has in their history acquired roughly 230 other companies. Now, this is not notable for any reason. It is just something that plays into the narrative that Microsoft is a company which refuses to fall by the wayside. They fell by the wayside for about 5 years there, I would say, and were sort of a passive growth company. But now they seem to be on the attack. And of course, I'm going to get Tesla in here somehow. There was much hullabaloo made at the Model 3 sales crashing in China last month, being down 64% to the month prior to that. But this month, as the long-range version of the Model 3 drops, there are an unannounced, but highly speculated, and a number that has been thrown around in local news outlets, 15,000 orders already for the Tesla Model 3 long-range version. Also, adding to the momentum which was halted and will reemerge, is the fact that the Standard Range Plus model went through a price reduction so that it will meet government incentive guidelines. So those were 3 stories from this week, and now 3 stocks that I will be watching this coming week, led by CCL, Carnival Cruise Lines. It is currently trading around $14.45. The 52-week high is $53.86. The 52-week low is $7.80. So we are double the 52-week low, but still a far cry from that 52-week high. A high which the stock may not see for a very long time in the future. But why is this worth watching this week? They've picked up private investments from an unnamed investor for $10 million, as well as an 8.2% stake from Saudi Arabia, as Saudi Arabia looks to divest from oil and invest in other sectors for the future growth of their prospects, I suppose. That's the best way to put it. But there is, from Pomerantz Law Firm, a story where they are investigating these insider tradings that are happening at the company. So which force is it that will act most heavily on this stock in the upcoming week? I think that Carnival Cruise Lines, having assured their immediate future with investments, will be looking to calm the waters and calm the fears of prospective investors. And it just really makes me wonder what direction, that if this stock does drop, it may be worth looking at intensely, because if they do survive something that many of their passengers apparently did not, the coronavirus outbreak, this is a company which is primed to be able to once again take the forefront of their market. The next stock I will be watching this week is strictly out of morbid curiosity. Virgin Galactic, ticker SPCE. They're currently trading at $15.75 with a 52-week high of $42.49 and a 52-week low of $6.90. This is a stock which has plummeted in this current atmosphere. They're almost as much as Carnival Cruise Lines. Carnival Cruise Lines, however, has an actual business plan. Virgin Galactic, I'm not sure. Virgin Galactic feels to me, and perhaps I'm ignorant, a lot like a bunch of guys sitting around smoking pot and saying, you know what would be cool? Tours of space. You think we could make money on it? I don't know. We got a lot of money to throw around. Let's go ahead and try. That's how it feels to me. And besides that, Richard Branson, key investor Richard Branson, recently sold $41 million of his investments in Virgin Galactic, and has stated, I think he is willing to sell up to $500 million of his investments, and able to make other investments in other ventures that he is attempting to capitalize on. So how is the broader market going to respond to the person who has basically been the name and the face of Virgin Galactic thus far, selling out on that much stock, especially when the stock is as depressed as it has been? The third stock I am going to be watching this week is Citigroup, ticker C. It is currently trading at $44.10. The 52-week high on this is $83.11. The 52-week low on this is $32. Citigroup is an interesting prospect for the very reason that it is a bank, and the banks have been punished mightily in this current pandemic. But I don't know that they need be treated that way. And when you look at things, Citi is, so their 52-week high was $83.11. They're 3 months out from being at $80. How much and how long will this pandemic crush the banks? Will the banks, as this emergency, this situation, this economic collapse is not as a result of the banks, will the banks be rewarded in some way by the Fed/government in order to right the ship as quickly as possible emerging from the pandemic? What is going to happen there with all of this loan money that has basically been forced through the door? It is interesting to me to watch the banking sector, and I think Citi is one of the they have paid as heavy a price as any bank in that sector, as any ticker in that sector, but they do not have as dirty a balance sheet as some. So that is it. Those were the 3 stories for the 10th Weekly Investor, as well as 3 stocks that I will be watching this week. I hope to see you back next week for the Weekly Investor number 11, as well as any of the other videos that I am able to fit in on this channel throughout the week. Not gonna work? All right, fuck it.